Hi, good evening, everyone. Rumit, Prakshan, Chaitanya, thanks for the kind words. I'm sure the mentorship is helping you a lot. So, thank you very much on that front. Hi, all. This is Ashish Kyal here. Welcome again to Elliott Wave News channel by Ashish Kyal Trading Gurukul and wavestrategy.com. And we are here at Friday at 4. Again, a very interesting move that has happened over the past 2 days. I'm sure if you have attended my Tuesdays at 5 webinar, which was an urgent and a sudden webinar, which I took, and you enjoyed the ride yesterday on the downside. Nifty was down by more than 325 points. It's just reversing on the upside again by more than 200 points in today's session. So I'm sure you are enjoying the ride. Roller coaster ride is what I am going to talk about. Is no different than what we saw happening in March. It was classic March, and this is how it is today. Also, the move on the upside has been after the oversold state of the markets and Bank Nifty. In fact, yesterday there was a very important 18-day cycle which was bottoming, and it seems like that cycle has kicked in today by protecting the lows of yesterday. That has worked out fabulously well. I'm sure if you are able to possibly understand the reason why the markets are bouncing back or why the markets are crashing, you might be enjoying the ride yourself on the other side. So I just want to first ask how many of you were there on the Tuesdays we called for an urgent webinar update, and what was the Nifty level? Do you remember at that point of time when we called for that webinar update? What was the Nifty? Post that, how much was the high that Nifty touched and where was the low that Nifty formed? So on Tuesday, when we discussed about the market, it's going to change. It's going to change direction on a Tuesday. The high was made by Nifty near around 11,300 post that. And what is the low that Nifty formed yesterday? What was the low? Do you remember the numbers that the Nifty formed the low yesterday? It was simply fabulous, right? You got all the way right from that level to the levels of somewhere around 10,780 odd levels on the downside, 790 odd levels on the downside. So Nifty had a huge down move in just 2 days of time post the webinar that we published. So that clearly shows that 10,790 was the low, and how well Nifty behaved post what we published on a Tuesday sudden webinar. That clearly showcased that something was there on that day. Otherwise, it's not very often that I come out so strong, so bold, talking that the markets have topped out for the year. And I have been maintaining my bearish or the cautious stand for nearly around 1 month. So, not the bearish stand, but the cautious stand. And this was the reason why I maintained the cautious stand. You can clearly see a huge collapse in the market right from that 11,794 mark to that 10,790, which is 1,000 point down move on Nifty, and you are simply still wondering what went wrong. Many of you who were bullish, super bullish for 12,500 or maybe lifetime high levels, and all of those things just went down the dumps. The reason being absolutely the markets behaved the way we expected as per the Elliott wave pattern, and the cycles have worked out fabulously well. So I'm going to talk about why did I turn so bearish on that 1 day of move. I turned so bearish. I came out very strongly because that level of 11,111 was broken temporarily, and post that there was a pullback on the upside towards 11,300, which was only temporary on the opening, and finally the markets gave away on the downside in a very sharp move that we saw on the lower side. So we will try and look at what happened and what changed in 1 days of time, and what is the current market scenario that you should be looking at. But before that, let us just open up our poll and do that again, whether what is the Nifty trend in the coming week. I want each one of you to participate here. I think I know the answer. It's going to be a tricky day, but let us just see what was the Nifty trend and what do you think is the Nifty trend going to be for the coming week on a Friday. Okay, let's just keep participating. Let's just do the polling and let's see where it is expected. So anyone who is watching me live on YouTube can possibly participate on the YouTube itself, whether the Nifty trend is going to be up or down. You can do that, or if you are there on the platform with me, you can just participate in the poll. Okay, that's very interesting insight which is coming up. I'm not going to reveal what is the answer right now. I don't want to bias you, but it's very interesting. So Nifty trend in the coming week, let's just wait for a few more people to vote and let us just see where they think Nifty is going to be in the short span of time. Okay, that's very interesting. And I can see any guesses. What do you expect Nifty to be doing? I The Nifty is expected to be up is 46% of the people are expecting up, and down there are 54% of the people who are expecting that the Nifty should move down. So what has happened? If I would have done this polling yesterday, it would have resulted into a very clear victory for bears. But if I'm right now, I'm doing polling today when Nifty has pulled back by 240 points, and that's why there is little hesitation on people marking it on the downside or the upside, and little confusion. Am I correct in in telling you that? Is that making sense? Okay, let's just end the poll and let's just get back to the charts and try and see what's happening with Nifty and where do we see the markets are going to be going from here on, using uh, the important cycle analysis that I've been doing for quite some time. Let me just do that. Okay, here is the chart. If you can see my chart over here, and I will hide myself to make the chart more visible. Okay, very interestingly, the down line which is drawn here is the line which I've drawn earlier, not today. And this line was drawn earlier because this was the low which was made on the previous occasions. So the zone of 10,650 to 10,660 is going to be extremely important zone, is what I'm looking at on the chart. The reason being 10,660, 661 is the level where there is a Gann support level by the Gann square of 9. By the way, tomorrow I'm talking at the Master of Cycles, and I'm sure you are going to enjoy that Master of Cycles training, where I'm going to be speaking on how to use Gann analysis for price forecasting. So 10,661 is the level, which is this one, and we can clearly see that the markets are still around this zone. It has not yet touched that level, but that's the next level that I have to keep a watch on, because there is a very, very important support lying on the downside. Now, if I have to ask you, where is the important resistance for market? I need you to answer me. I don't want to give all the answers to you. I want you to be telling me, where do you think is the resistance of the market on the upside? 11,111, absolutely. That's the first level to look for, because that is the level from where we did a breakdown. So 11,111 is very important. And if that is taken out, what is the next level that you have to look at on the chart? So 11,111 is a very important level that you have to keep a watch on. The next level that you have to keep a watch on is 11,200. This is the level, because this is where a very important support was placed, and price managed to find support again and again in this zone. Can you see that? So this becomes 11,111 to 11,200 is the zone of stiff resistance that we can see it on the chart. And looking at this moment, I think a bigger downtrend has started, given the fact that I talked even earlier that this was the 55-day cycle low. So this low which you are seeing was the 55-day cycle low, and this is now breached in just 26 or 27 days. And that's why the top which is here, which is 11,794, should remain protected for at least 26 days. The top is not going to be breached for at least 26 days. Now, based on what concept I'm talking, all of these things is purely based on the cyclical analysis that I've been doing. Apart from that, I also shared across one research article yesterday. I'm not sure if you have registered yourself on the website wavestrategy.com. I am sharing across a lot of research, and this research article was simply fabulous. If you would have probably gone through that research article, you would have understood that there is a price times square and similarity that I keep looking at, that I keep checking, right? So let me just show across that specific chart. If I can find it on over here, just give me a second and let me just share across that chart. If I have it on my screen right now, and that's a fabulous chart that you can look at it. So just here it is. Let me share across my screen. Okay, and if you can look at this chart, if you are able to see this chart, let me just zoom in. Okay, this is there on wavestrategy.com. Are you able to see this chart? Now, this is a chart which is very interesting. You can see the vertical lines and then horizontal lines. And this looks like what, you know? This looks like my math tuition book in school days. I used to write down my problems and sums in this kind of a book. So it shows me that, but this is fantastic because it is working extremely well. And this is working very, very decently. So what you can see on the vertical lines, the blue lines, which are the vertical lines, are nothing but uh, the blue lines on the vertical lines are nothing but a very clear timelines which I have drawn. Okay, these are the timelines which I have drawn. If you are able to see the chart now, let me just make it more clearer. The timelines which I have drawn, and the horizontal are the GAN price action areas that I have drawn. Okay, so that's the intersection of the GAN price action area and the time cycle came yesterday. Yesterday was one of the very big sell-off that we saw, and that was also an intersection of the time and the GAN price action areas, and we clearly saw a reaction in today's time from that lows. However, this is a temporary pullback. I am not looking at the market as a new start of an uptrend again from here on. This looks to be a very temporary pullback, given the fact that a bigger cycle, so these are smaller cycles, given the fact that the bigger cycle, which is a 55-day cycle, has turned back down. And that's why the 18-day cycle, which is trying to push the prices up, is going to result into a temporary pullback. So in order to explain in a very simplistic language, let me just show my screen again here. What I am trying to say is that we are at a confluence of time and price, and but the bigger cycle has turned down. So when I say when the bigger cycle has turned down, which means that there is a bigger cycle which is now on the downside. So by that I mean that the bigger cycle is now down. However, there are smaller cycles which results into up move, and this smaller cycle is turning back on the upside. So what you are witnessing is a very clear no trading zone right now, because the bigger cycles are down and the smaller cycles are turning up, which means this pullback that you are seeing on the chart is going to be temporary pullback, is what I am making out. So this pullback should be temporary. It can halt anywhere around this zone, or maybe if it manages to cross above, we might start seeing a halting behavior somewhere around the zone of 11,300. So that is the area of resistance, or the zone that I'm looking at, where the price should start halting. Post that, I think the downtrend should again resume. This downtrend resumption is going to be very sharp and fast. That's my take, and this view remains valid as long as on the upside we do not cross back above 11,500 levels. So 11,500 is going to be important. I'm going to keep a close watch. If that level is crossed back on the upside, then maybe some other pattern or lower probabilistic scenario is turning out. But if that pattern is not on the upside, I think the top was formed here. This is the first leg of the fall, and we are probably witnessing is nothing but a B wave. Post this B wave or wave two, we might start seeing the C wave back on the downside. That's what I'm looking at right now on the charts. So B wave is going to be treacherous, it's going to be tricky, it's going to be time consuming, it's going to be slower. So next Monday we are going to see how this B wave pans out, and the moment we see a break back below the low of 10,800, we will be pretty sure that the next set of selling pressure is starting. What is very interesting in all of this development is that Bank Nifty was topped out much earlier than Nifty. Now Bank Nifty topped out much earlier, even before Nifty, and look at it, the Bank Nifty Ichimoku cloud is also broken on the downside. So which means that the daily Bank Nifty cloud is taken out on the downside, which happened only after the March lows were formed, and once it was up, it was sustaining there on the upside. So A very interesting observation if you want to make from an Ichimoku cloud is that on a daily chart, when price break the Ichimoku cloud for nearly around 20-25 days, I have observed that it does not break back above it. Similarly, when prices break the Ichimoku cloud on the downside, the top which is formed should not be taken out again by nearly around 20-25 days. So that is the observation, which means that prices should continue to sustain below the cloud. It might just whipsaw around that area, but should continue to sustain below the cloud for at least 20 to 25 days. Now, that observation is exactly in sync with my cycle analysis also. Ichimoku cloud, in a way, if you don't know, is nothing but based out of cyclicality. We are using Chiku span, which is a 26 days behind or a lagging close. By that line, we are trying to push a cycle back 20 or a phase shift, not push. We are phase shifting the price 26 days back. I was doing some research and for tomorrow and a lot of things I've been going to talk about tomorrow. In Hush time cycle, we are going to be shifting this line 26 period ahead, which is known as future line of demarcation. So I'm going to do that. And the intersection of the line and the price, the intersection of the line and the price tells us that the reversal has happened. So the Hurst future line of demarcation, which is also known as FLD line, has now intersected with the price pattern, which indicates that again confirms my analysis that for at least 26 days, the top at 11,794 should not be taken out. Now try to understand these are all probabilistic scenario. There is no certainty of the market. We are all playing a probabilistic game. So tomorrow, if it takes out, don't come back to me and say this is how you said and this is how we lost money. This is your hard-earned money. You need to use a stop loss. You need to evaluate it yourself. And this program, Friday at 4, is pure educational purpose only in order to explain how do I see the chart. So I'm explaining you about Ichimoku cloud. I'm telling you what I'm reading on GAN price action areas. I'm telling you what I'm reading on 18 days of time cycle. I'm telling you what I'm reading on 55 days of time cycle. Again, in a cross, if I have to repeat, 55-day cycle has turned on the downside. That's one. 18-day cycle has bottomed now. So few days of retracement or overlapping up move is possible. However, as prices have moved below the cloud on Bank Nifty, it indicates that the bigger downtrend has started, which is again confirmed by the Nifty prices crossing below the future line of demarcations or the FLDs as per the Hurst cycle, which indicates that for 26 days price should not take out the high. So all of this is not to confuse you. It to just tell you that wave A might have kicked in today. We are seeing a pullback in the form of wave B, and post this wave B completion, the move on the downside in the form of wave C should start. That is what I am trying to communicate right now. Is it making sense? Am I making sense? Okay. Is it clear or confused? So the intention of this webinar that we do is to ensure not to confuse you, but to empower the traders. That is what I'm trying to do here. Let's take a polling. I thought it's very important for you to understand the current stage of the market. From the wave perspective, I think the top is formed at 11,794. If not 11,794, then maybe the top is formed exactly at the level where it topped out at 11,618 or 620 levels. That is where I think we have uh, the plan. So are you with me? Are you understanding the entire scenario right now? Okay, let's move on. And I'm going to take a poll again. Tomorrow, I'm going to speak on the Master of the Cycles program. Let me just share across that again with you. If you go on the website wavestrategy.com and you can go on the Master of Cycles page, we are taking a few more seats for tomorrow. In case you are interested, you can enroll for this program, and we will be talking a very detailed approach on what is 55 days. It's not a magical number. It's something that is derived. How did I derive that number? What is the cycle? Along with that, what is an FLD? Exactly. What is a future line of demarcation? How is Ichimoku Chiku span, which is a lagging line, linked with a future line of demarcation, which is a leading line of her cycle? So Ichimoku essentially is derived out of cycles. to be very honest. Okay, it's going to be very, very important for you to understand that. And what we are witnessing now is something very similar to what we witnessed in March. Maybe the intensity of fall might not be as much as March, but I think it is going to be subdivided. So try to understand. March was one side fall, and in order to alternate price over there with that wave pattern, this fall, which we will witness, will be subdivided. This is known as the rule of alternation that we keep looking at within the neo wave patterns. So this wave on the downside, C is going to be subdivided, more time consuming than March. And I think we are starting again the resumption of a bear market. This is a bear market, mind you. I've been talking this as a bear market pullback from 7500 till the levels of 11794, and this can be the resumption of C wave of a bear market. Now, this scenario holds true as long as we do not see a move back above 11500, 11550 levels. Let's see if that happens at any point of time. So this is what I'm going to be talking now about MOCs and combining all of this Ichimoku cloud with the price action of GAN and the time cycle of GAN and HUST all together in one go. So if you want to register, you can simply register on the wavestrategy.com, or I'm launching a poll right now. If you want to register for this program, Master of Cycles, you can simply mention participate in the poll, and I will be sure that my team gets in touch with you if you want to get into the program tomorrow. Okay, meanwhile, I'll take a few Q&A which is there, so just give me a second. Okay, Chandrasekhar has to ask, given the sharp recovery today, do you still consider that the trend has changed? Yes, very much. I am convinced that the trend has changed, and what is there on the downside is going to sustain. So this pullback should be temporary. We will see. It's always start sharp and fast. Remember, every pullback in a bear market is sharp, fast. Then only the pullback will happen. Otherwise, the people will not be able to be, the markets will not be able to trap the people. So it happens sharp and fast. People start jumping in, and then it fizzles out. That's how it happens. Okay. The next is, was today a dead cat bounce? Yes, it looks like that. Nemo, okay, you received a call on Nifty. Let me check with my team. You should have received the Nifty research reports in the morning, which we published. So just ensuring, do not worry about it. You will get it. Okay, can you show how you have marked levels since March onwards, Gaurav? Okay, you want me to do that? MOC is not free, please. It's paid. It's a 12-hour session. It starts 10 a.m. tomorrow and Sunday. It goes on till 4. There will be a break in between. We will do a lot of practical exercise where I'm going to teach you how to time the market by looking at time forecasting tools. We will look at detrended price oscillator. We look at centered moving average. We look at envelopes. We will look at ROCs. We look at how to divide price by the centered moving average. So a lot of those concepts we are going to do. Okay, so I am going to talk on that front. Let me now just do the wave counts. You want to see the wave count, so I think it's best that you can see the wave counts in the daily morning research report, which I publish daily morning. So ensure you do that. And by the way, guys, one very important aspect which I forgot to touch base upon. Okay, so everyone has participated in the poll. Fantastic, you can keep doing that. Let me just end the poll now if you have already done that. Just 1 second. Okay. I'm just ending the poll here, and let me just share across what is important on the Traders Forum. The Traders Forum is the Nifty contest that we ran through, and it is very, very interesting. Yesterday's Traders Forum that we checked and the Nifty contest that we ran through, we got a huge participation, nearly around 100 people. Now, what was very, very interesting? Out of all the 100, only 2 or 3 anticipated a move below 10,800 levels. And the majority of them, the average, I think, came out somewhere around 11,180 odd levels, which was an average answer that we got from this this contest. So the average answer is 11,180 that we got from this contest. That clearly showcased that no one was anticipating that, which means that 11,180 to 11,200 level is what is there in majority of the people's mind, and that level is going to be very crucial to watch. If Nifty can manage to sustain above that level of 11,200 on the upside or not. That's 11,180 to 200 is going to be the level that you should be looking at. Exactly, Ramesh is pointing out 11,150 was the max pain area. Brilliant, Ramesh. Yes, that's the point that I'm trying to make right now over here. Okay, that's it from my side. And continue. Rabindranath has another question. If this trend continue, will it reverse in March, April, May 2021? Rabindra, we are going to discuss this in much more detail tomorrow in the MOCs, where we think is going to be a reversal happening on the market from here on. Okay, great guys. I think we had an amazing session. In the nutshell, I'm looking at this pullback as wave B. I think the markets have topped out. I still stand by my analysis of Tuesday, and you have probably witnessed an amazing move on the downside. If you acted even on a Wednesday, in a day's time, you got nearly around more than 350 points on Nifty. Today's pullback is definitely interesting, and it shows that we are in wave B. And once the support level breaks again, I think the C is going to go down very, very clearly. That's it from my side. Have a wonderful day and see you tomorrow in the Master of Cycles program. And I will be talking a lot about these things in tomorrow and day after. So see you there. Be ready. There will be theory, but we are going to look at a lot of practical examples, practical charts, and insights into how to go about the master of cycles, how to look at cycles, how to decipher cycles, how to combine gain levels also together. Thank you very much. Have a wonderful day and take care. Stay safe.